Okay, the review for GBPUSD. So basically, I've sent the screenshots of weekly chart and daily charts. So let me just so this is weekly. This is weekly first of all. If you consider these swing points and the price action in between them, it is a range. So drawing to brush. So this high here connected to this high and the price action between it, price closed above it, the upper wick, then did what? Close bearish. That's a strong indication that it's a sweep of liquidity and price will do what? Price is definitely attacking the opposing liquidity. So that's a strong indicator for where buyers is going to the next week. And not only that, it is a very engulfing, really large engulfing candle that took the highs and lows of the previous weekly candle. Now that's what I call, or I've heard I still mention it too, as a reversal, weekly reversal candle. So this is a bearish trend basically, and it's going to last for more than a week. So I'm expecting this coming week now, so also expecting it to close bearish overall. Now that aside, down to daily, weekly profile. Monday bullish, Wednesday a tight indecision candle, but we already have a bias. It is in this period that people are confused that we are supposed to be loading sales. I very much underperformed last week because I was very lazy and couldn't even take most of these trades. I didn't even analyze GU throughout last week, but I knew it was selling. I only took one trade on EURUSD from on Monday and held it till Thursday evening. But even that, I didn't add to the position like I planned. So it was I under risk basically because I didn't add to the position, and I even took partials on Thursday instead of holding to full TP. So these are these are just ways. It was lack of clarity too. It has been a while I backtested and also studied price action. But anyhow, I'm more active in this new week. I'm more active in this new week. So Monday, Tuesday, Wednesday big drop, Thursday continuation, Friday kind of retracement. Thank God it's Friday. Open high, low close. A typical bearish week. That's how it's supposed to be. Open high, low close. The way ICT does it, power of three. Anyway, moving on to 4 hour. 4 hour price opened around here, then traded higher. I think on that day I wasn't surprised because we have this fair value gap here, and the way last week price action closed, of course, market structure shift on the daily time frame. Let me go back. Market structure shift on the daily time frame. You see, after price took buy side liquidity and traded the first low that price breaks through and or trades below it is what the market structure shift. So our weekly market structure shift, abi daily market structure shift. This is expected. You expect price to trade into what? Into a fair value gap, either this or this one that was formed on Monday. So that was expected. And if you enter from 1 hour time frame, because you are working with daily now, it's not out of place to enter on 1 hour time frame. If you enter on 1 hour time frame, it's not trying to be perfect. This is a swing point, this is a swing high, and also the high of what? Of last week Thursday price action. of this fair value gap, or the middle candle of this fair value gap, is it is not a crime to do what, to place your SA just above this swing high. It's not a crime. Not trying to hunt sniper entries, or trying to trade from this particular last up close candle before the dump, like some people define it. So some people set their limit order here. It was not hit. We are not trying to chase. I'm not trying to chase sniper entries. I'm trying to work with what price is currently giving. So entering from this 1 hour fair value gap is this, or entering on Tuesday from the daily fair value gap, because it is smaller now than a 4 hour or 1 hour fair value gap. You see, okay, 4 hours fair value gap, or is it 1 hour? Which fair value gap did I use to enter price? It is this particular one. And what is this particular one? I think is the 4 hour. Let me see, 4 hour. No, not the 4 hour, it's the daily. So the daily fair value gap was smaller than the 1 hour and the 4 hour fair value gaps. So I use that one, enter at 2 a.m. When was this? 3. So enter there, put stop there, target the swing low. If it took more than this to hit the TP, I would still be holding the trade if I entered. So if it will take a week, I would have entered through the weekend. So this is the first entry. Hold it. I think I'm starting to like trades like this now, not trying to find a way in lower time frames. You get, until there's clarity, like the Thursday trades that I will soon analyze. On Thursday, on Thursday, you see that we already have a change state of delivery, had a market structure shift earlier, and we already have a fair value gap here. So this is the fair value gap, and we have fair value gap on Thursday, scale to what, lower time frame, because everything has been established. I circle this is because it is a very good example of what, of the candlestick patterns I look out for. So very good example of the candlestick patterns I look out for. A good a good engulfing candle, the one I admire, and it stands out for me. I look out for it a lot. And an engulfing pattern, and also if you price trades into what, the fair value gap on 15 minutes, very clear, everything very clear on 15 minutes. Everything very clear on 15 minutes. On 15 minutes, so Thursday 2 a.m. we have sweep. I was looking at this in real time and comparing the price action with USD. I should have even, my mind was telling me to enter it. I think I even set limit order at a point, but it didn't hit. Right? No, it was on NZD USD. I set the limit order because the price action was very very similar, but it didn't hit. It missed it by like 5 or 6 pips. About, yeah, and that's a lot on NZD USD. So I set the limit order when price was making this high. But either way, that was a very impulsive trade because I didn't actually analyze it properly. I just saw that it correlated with USD price action, and I wanted to enter impulsively, which is very very wrong. And I'm even glad that um, I didn't partake in it, because I would have had one or two things that would go wrong with it. So we have sweep of liquidity again inside what, inside this higher time frame fair value gap. We have market structure shift, or change state of delivery, the new order block that was formed right here, didn't enter there, mark out this formed fair value gap, put your entry there, your essay here, or it can even be here sef. It's a very valid place to put it. And target this what? Target this sell side liquidity or the weekly range low. And that's how you have a what? What I mean R is this. This is a fucking 10 more than 10 R. And on New York session around what? Around 8:30 we have this fair value gap, just similar to what we have here initially. Price trades into it around 9:30, formed a market stereo shift at what? At 9:45, price trades back into the formed fair value gap. You can enter a small trade here. Now this is how I do it in real time when I'm actually in the zone. This is how I do it in real time. I've done it in real time. I can trade like this, stack 3 positions at once in real time. Make God help us, make dey make money normal like this. So this is more than 2 hour trade. See? So on Friday, thank God it's Friday. This now will be a form of what? Classic sell model again coming week. Sell side liquidity. We have an established range like this. The buy side of the model, buy side liquidity, what to expect by next week, what to expect. This is just the review is over oh. Just price, maybe price sweep liquidity, dance around, but at the end of the day come and take out this low. That's just it. So that's it.